it's slowed down a bit. Now, granted, premiums have not come down at all. In fact, they continue to go higher on anything American. American Eagle silver, on junk silver. Gold buffaloes have come up because the mint has had a problem keeping up with gold buffaloes, although they did just send out a letter to me saying that they hope to have more available next week. Um, it's kind of a gray area right now. I mean, from the standpoint of premiums, no, they haven't gone down at all. Availability's not gotten better at all, but the demand has kind of slowed down considerably, at least in the last week. And I guess until we see some sort of resumption of chaos, it'll be that way. And it's just a good time for people to add to their portfolio now before that happens. And I said this, several weeks ago in December and in January, trying to find a rhyme and a reason why demand had fallen off so much. And we talked about that ad nauseum, certainly. And then bang, something happens and it just goes sideways again. And I think that's where we are right now. People's memories are short, but not that short. And I think if we see more rumblings in the banking system, which we have to, I mean, the Fed is aiding and abetting it by continuing to talk of raising rates. And when you see the overnight repo market paying a rate considerably higher than the banks will pay you even in the CD, this is where all the money market money is going. And this is why people are leaving those regional banks. The only way the regional banks can come up with the money to pay for the redemptions is by selling assets. So I would assume that certainly the end of the regional banking problem is not over. In fact, it seems to me it's only just starting to gain steam. We won't know that until we see which one breaks or how many break and what are the ramifications of that. All that will take is, or just that one event would, I think, send people into a frenzy all over again who, over a couple of weeks, have forgotten about it. More often than not, the savings that you find in larger bars often is not commensurate with the loss of flexibility. Now, I would say that mostly in gold, where you buy 1 ounce bars and you can save some money buying 10 ounce or kilo bars, but that savings is not commensurate with the loss of flexibility. In silver, it is more commensurate. I would choose 100 ounce bars over 1,000 ounce bars, even though the savings is significant, unless you are going to keep it in a storage facility and then use the price action to sell it and reposition to somewhere else. But quite frankly, most of the people I talk to, their time horizon is much longer than that. And if they say to me, look, I need to buy a property in 6 or 8 months, I typically say, listen, as much as I'd like to earn your business, in good conscience, I have to tell you that I wouldn't recommend it. That, yeah, it may turn out to be the smartest thing you've ever done. Get your money out of the banks, put it into something solid. But like I said, I've been at this game long enough to know you can bang your head against the wall when you see the world aflame and the powers that be do all they can to step on the neck of gold and silver. And if you need it for something, whether it be to pay a down payment on a house or a college tuition or whatever it may be where you need it, I think you have to stop and think about the wisdom of investing it in something that could go sideways. I'd rather see the people put it in 60-day treasuries or 90-day treasuries, or at least you're guaranteed to get the return back, the principal backed by the US government. But in general, the answer to that question would be yes. If they're looking to, make a large purchase and understand the risks associated with silver and see it as being a real opportunity, as I do, as you do, then yeah, you would save money by buying 100 ounce bars and even 1,000 ounce bars. In buying 1,000 ounce bars, you will have the storage expense. In buying 100 ounce bars, you can take possession of it yourself and easily liquidate them yourself. Kilo bars and 100 ounce bars would be my choice if you were going to buy, if you wanted to maximize your liquidity while also saving on buying items that didn't carry the premiums that the smaller units did. In fact, to me, the sweet spot over the last several years, and it is still today, would be the kilo silver bars, which have been actually less than the 100 ounce bars, which is unusual. So the Valcambi, the Germania mint, the Valcambi mint, and the Nadir mint are 3 kilo bars that are all very nice, that are all very affordable, and would fit the bill very nicely on that. I think again, the ability to continue to suppress the price of gold and silver with any success becomes severely compromised in a world where the central banks are voraciously accumulating it, and they have been using the Western suppression to do so. I mean, if you realize that we hedge all of our production, all of our inventory, and it costs me just over $7,000 right now to control a 100-ounce gold contract in my margin account. So what they have been doing for a very long time is suppressing the price on paper, knocking it down on paper. If you have a half a billion dollars in your margin account at 30 times leverage, that controls $15 billion in notional gold and silver. And so they can drive down the price by shorting it, and then they scoop up all the physical globally, and then they reach into their pocket and paper over their shorts. That's what they have been doing methodically, slowly, in order to drain the exchanges without causing too much attention. But you can't do that when someone says, I don't want it paper anymore, I want to stand for delivery. And I think, when that moment happens, the whole thing blows apart. But it's becoming more and more challenging for them to suppress the market when it shoots right back up. And that just is indicative of all of these countries that use those opportunities, and our clients using those opportunities to accumulate physical. You can only do this so long until you can't. And we'll wake up on a Monday morning to a whole new reality at some point. But if they do it, because it's obvious, and if you look at the COT report right now, the commercial banks are short gold right now. That's why they knocked it down on Friday. Well, who's buying it right now on the other side? And are they going to take delivery of it? And it just becomes a much tougher game. To me, it's a subsidy in an environment where, we should be happy things go on sale once in a while rather than lament them. You got the digital yuan, which has settled the majority of all the trades and settled contracts on the Belt Road Initiative for the last several years. It's done north of 30 billion in transactions. They used it at the Beijing Olympics. I believe they will use the rails of the digital yuan to show the transparency, the immutability, the veracity of what every one of these countries pledged to the system, have it audited, have it held in vaults that can be audited by nations, or however they decide to do it. It has to be legit. And the reason I think that it won't be convertible is that, here again, De Gaulle proved that convertible currencies convert. And I just think that they will use distributed ledger technology to show what is pegged there and give the currency stability rather than people walking around with gold and silver in their pockets. So, maybe it does come to that. Maybe it does come to the fact that we're all walking around with gold and silver in our pocket. But I think in order for all of these countries to be able to have equal footing at the table, for example, the BRICS nations, they rotate their presidency every single year. There's not one central dominant player there, even though China is pushing a lot of this. I think they will do mutual cooperation. And if I were thinking of a way to make it work, because here again, people are just taught to hoard gold and silver. It's not a good way for a currency to work. If everyone's holding gold and silver, you don't have enough velocity. But instead, if you peg it to gold and silver, and maybe 20% of every new currency unit is pegged to gold at whatever price it may be, or whatever commodity that they use, because they did say the folks behind BRICS, the finance minister of Russia, said it will be pegged to a basket of commodities and local currencies. I just think if you use distributed ledger technology appropriately, if you house it and allow it to be audited appropriately, what it will give will be stability to a system that has none. And so, I don't think it will be converted, but I do think it will be back. Now, that's just my own opinion. I just think it's the perfect way to roll out a CBDC under the guise of transparency and stability, backing a new system. I just don't think that they will ever allow those, whatever it is, backing it to be convertible. Maybe I'm wrong. Other than that, I don't see a way that you will stop this exodus out of the dollar, which is the Fed realizes that if they really were to get tough on inflation and try austerity, try to clean up their balance sheet, try to create a surplus and stop spending, everything would absolutely blow up. And that's what I've argued for a very long time. maybe even the reason they've weaponized the dollar is to find a villain in all of this. And that villain are those sons of bitches, Xi Jinping and Putin and OPEC. They did this to us. They dumped the dollar. They did it to us. Now let's start over with a new system. Maybe that's why they did it. Maybe that's why they're stupid enough to have interest rates above what the banks are able to pay the depositors, blowing up the 5,000 regional banks from the inside, blowing up all the commercial real estate, blowing up the whole thing. And whether it emanates from the outside or from the inside, I think in order to get to that point where we can start over with something backing a system, not convertible, but showing honesty and transparency, maybe you stem the tide. But either way, I don't see a way of getting to that point without bottoming out first.